you for joining the webinar today. I know a few of the names on the webinar, so good to see you all. Oh, sorry, I can't see you, but good to see that you're here. JobKeeper. So what I wanted to just chat about today was, since last time we spoke, there were some rules and changes, but it changed again after we spoke on the last webinar. Now, I just want to be clear, the rules have not come out, but I know that we know enough to be dangerous, so that's good. One thing just to keep in mind, I'm just going to call this JobKeeper version 1, the one that's currently in play, and JobKeeper version 2.1, the new version if you like, and when that comes into play. So the current JobKeeper, version 1, it continues to 27th of September. Nothing changes there. So if you've got your employees on there, nothing changes, keep reporting, do everything right. The main change that's come through around the 7th of August was that now they're saying that you can extend your eligible employees, not just for the new JobKeeper rules, but for the current one. So that means that if you have employees employed, and I'm going to say this a couple of times, so if you miss it the first time, don't worry. So remember the date was you had to have employees start at the 1 March date. Well, it will be extended to any employees, new employees, from 2nd of March to 1 July inclusive. 2nd of March to 1 July. So any new employees you have, permanent and full-time, easier to assess, and also long-term casuals, which I'll discuss. So if you have those, we will go through what you need to do. So the reason why I wanted to do this seminar now, and I know we don't have the rules necessarily, is for this point here, because this is probably something people are going to miss. So if you have some employees, that means they can get the current JobKeeper. You don't have to retest for this. This is still the normal JobKeeper. It's just you can add some of these employees on. They'll get it for 6 weeks before the 27th of September. And there's no retesting for this particular test. So I'm just going to run through this, so just so you're aware that currently nothing's changed. You know, employees that are eligible are entitled to JobKeeper, the current JobKeeper, if employed from 2nd of March to 1 July, which I stated already. Only entitled to JobKeeper from fortnight commencing 3rd of August. So you test 1 July, but you're not going to start paying them until the JobKeeper week 10, whichever way you like to understand it, or the 3rd of August, effectively, to the 17th. That's the JobKeeper fortnight. So you start paying them basically in August. So employers have until the 31st of August to meet the wage condition. Wage condition being the $1,500 a fortnight. So $1,500 a fortnight from the 3rd of August, week 10. So you've got to pay the $1,500. So it's just like the normal JobKeeper. It's just that you've added on the employees. So the meaning is that you need to pay the minimum of $1,500 a fortnight from the 3rd of August to top them up. You need or top them up. So meaning if you're paying someone $1,200 a fortnight, you need to top them up the $300 up until the 27th of September in order to get this current JobKeeper. Nothing changes. You're still paid in arrears. So if you think about if you've topped, so you 31st of August, you pay your employees, those that you think are new. And then you get them to fill out a nomination form, get them back by the 31st of August if you can. Remember, they don't get lodged, but you still have to complete them because you want to find out and make sure they're not employed somewhere else. So 15, so yeah, so talking about the top up, I'll go through it in more detail in a minute anyway. So that's why I'm spending a bit of time on this one, because I think it can slip past because everyone's focused on the new rules. I will be discussing the new rules as well. What I just, as I mentioned to you before, it means that employees started on 1 July, permanent, full-time, and also long-term casual employees. And everybody asks, what are long-term casuals? Same meaning as before. So casual employees need to have been employed on a regular and systematic basis. Now, as you recall, the rules in 1 March is that you had to have 12 months prior for casual employees working on a regular and systematic. Same concept. So from the period, say 1 July 2019 to 1 July 2020, 12-month period prior to 1 July, You've just got to have casual employees on a regular and systematic basis. So those casuals that missed out previously, maybe they're in JobKeeper now, at least for the 6 weeks. So they've given us some information on what is regular and systematic. You go to the Fair Work Act and it gives you a bit more description there. But effectively, recurring work scheduled or maintained on a reasonable expectation of ongoing work. Like a waitress at a restaurant, potentially. Pattern of rosters of hours, a strong indicator, but not necessarily have to be the same hours and the same days over a paid period, because, you know, obviously COVID probably would have changed that slightly. So pattern of work with hours regularly offered and accepted. So what is not regular and systematic? So employees not able to offer suitable work for substantial periods of time. So maybe on a, you know, once a month or something like that. Individual made themselves unavailable for a substantial period of time. They just didn't want to work, holiday time. Individual is only offered or accepted irregular or occasional work. Maybe it's one every 2 months, who knows? So I think those are bigger questions around those, and maybe more research has to be done. Happy to answer any questions if you've got them at the end of this or later. Remember, this is the current JobKeeper I'm still talking about, and I'm just talking about those employees from 1 July. The employees that you're already in JobKeeper, you don't need to retest there, just keep going as normal with them till the 27th. So eligible employees, so meet the criteria from 1 July, outlined in next slide what the criteria is, which is the same as your 1 March ones. So before 3rd of August, you're assessing employees that started from the 2nd of March to the 1 July. You're only going to get, you only have to start topping them up from fortnights commencing 3rd and 17th of August. Been an extension granted by the ATO until the 31st of August to make the top-up payment to meet the wage condition. And yes, you do need to agree and have the nomination forms. And then everything else proceeds as usual. You report at the beginning of September for those new employees, you include them. So when you do your payroll, make sure you include them as start date, if it starts. You know, if they're 1 July, your start date is 3rd of August. Eligible employees. So if you recall the test from 1 March when you had employees, nothing really changed there. You've got to be employed either as non-casual employees, so full-time, part-time, fixed term. Your long-term casual employees, which we discussed. You're 18 years or older. You're an Australian resident or permanent visa holder. So still not probably possible for those that don't, you know, they're travel visas or something that maybe they still can't get JobKeeper. So JobKeeper key dates, 31st of August. I know I'm saying it a couple of times in different ways, but it's just so in case you're looking at your emails, you'll get it. You need to meet the wage condition, pay the top up for 1 July employees. Obviously, the other ones you're already paying them. And ensure you enroll, do your nomination form and enroll them in your payroll system as you would have done for the 1 March ones. Nothing new there, right? So JobKeeper payments, get your employee nomination forms completed. So for your 1 July employees, you don't need to do it for your 1 March ones because they're already done, no change there. Only receive JobKeeper from 1 employer. So same rules there as usual. So if you had someone that's casual and they have a permanent job somewhere else, that permanent job needs to offer them JobKeeper. And they might be on that already, so they can't get it with you. Employer must nominate fixed or permanent employee if casual elsewhere. That's what I just talked about then. And the rules about 1 in, all in haven't changed either. Also, don't use this form, employee nomination, if you're nominating as an eligible business participant. So this will apply also for people that have started their business, sole traders, that may have started in that 2nd of March to 1 July period. So that's a great opportunity there for them as well. Admittedly, you're only getting it for 6 weeks, but at least that's something. Now I'm going to jump into JobKeeper version 2.1. Why do we have all these versions? Well, its original JobKeeper is version 1. Then what happened, my presentation had version 2, and that has slightly changed. So that's why it's important that you understand that, and it's version 2.1. So fundamentally, things are staying the same. We haven't seen the rules to get a bit more specific information. So as I said, we're referring to the new JobKeeper as JobKeeper version 2.1. And my last webinar, I did sort of version 2, and it has changed. So we still have the extension of 6 months, 28th of September until the 28th of March 2021. That hasn't changed. An employer is still required to reassess eligibility based on actual turnover. So we'll have to reassess, and we'll go through that. From 28th September, the new JobKeeper will be stepped down. So instead of 1,500, it'll be a lesser figure, and I'll go through that. It will be split into two tiers of payments. I'll go through that as well. It remains open to new part recipients, provided they meet the eligibility criteria. Anyone can apply so long as you meet the criteria. And includes employees starting 1 July, permanent, part-time, casual, as we discussed. So the test is going to be really for the new rules from 1 July. So if you have people, employed from 1 July, you don't have to go back to 1 March. But you might need to consider the rules of 1 March because they'll be similar, I think, for 1 July. So down here, if you look, your period is 28th of September, 30 through March, 30 January, is the relevant BAS period is September. So it's a quarterly BAS period that you're testing. You're testing September 2020 to September 2019. And then you have to retest if you want to get JobKeeper from 4th of January 2021 to 28th of March 2021. The relevant period is, again, the BAS. So you go to that September, October, November, December BAS, look at 2020 and compare it to December 2019. Now, what I was talking about the periods is the rate fall. So if you just look at this third little paragraph down here, is that if you meet the criteria of turnover, then your employees go from 1,500 to 1,200. Now remember that, because otherwise you could be topping up people 1,500 after the 28th of September, and you're not going to get that back. You're only going to get 1,200 for 20 hours or more, or 20 hours or less, 750. And then if you meet the turnover test 4th of January to 28th of March, you've got 1,000. You've got $1,000 fortnightly amount. So instead of 1,500, goes down to 12, and then it goes to 1,000. Again, you have to reassess to meet your criteria. And if you've got less than 20 hours, it's 650. Now, when are you actually assessing this? Because if you think about it, we're already in mid-August, well, even late August. So for the 28th of September to 3rd of January, you'd be assessing around the BAS lodgement date. So it tells you to assess before the lodgement of your BAS, the quarterly BAS. So 28th of October. Now the Treasury, I think, says mid-October because some of you might be monthly, so you might have a 21 October lodgement date. That's still to come out. We haven't clarified. But effectively, by that stage, I think 21st of October or 28th, you'd know if you're going to meet the criteria because it's based on your BAS figures. However you lodge your BAS. And then if you're looking at January to March, if you're a quarterly lodger, you have to the 28th of February to assess. But you've got to remember that sometimes the Treasury has said mid-January, probably because there's monthly BAS lodgers which are 21 January. They don't get the extension like the quarterly ones do. So to give you an example, if you've got just a business that's in the 30% rate, turnover under $1 billion, previously, if you recall, you had to be eligible for the June quarter and September quarter. That's all changed. They've made it just a September quarter. I think they made the changes due to the fact that, if you look at it, Melbourne went in lockdown in that June, July period. So they could have had some turnover. It might have disadvantaged them. So I think that's worked in our favour that we look at the September quarter alone. So if you look at it, if your actual for 2019 was 300,000, so situation one is you've got 2020, your actual is 175. You've had a fall of 42. Now I'm basing it on a business with 30% fall. So yes, tick, you met the criteria. Situation two, you've got a fall of 225. Your fall is 25%. no, you don't meet the September criteria. So what does that mean? That means that you're not in the JobKeeper for that quarter. So from up to 27th you are, if you're already in, 28th to 31 December, you're likely in or not, depending on whether you meet your rate. If you're out, it doesn't mean you can't retest again. So you could retest for the December quarter. So, sorry, September quarter was July to September. December quarter is October, November, December. So you can test again in that period and compare it to last year's. So if your actuals, if you look at the second column there, 2019 actual revenue was 300,000. This is based on your BAS, right? Your situation one was your actual revenue for 2020 was 200,000. You got 33. It's over 30% decrease, so you're eligible. So again, then you have to go through that process once you're eligible, and I'll summarize that. Now, the Commissioner does have a discretion. Some people have asked what happens if I don't meet the actual test, or I don't maybe even have a quarter 2019. The Commissioner has a right to provide alternative tests like they did for the first JobKeeper. Now, it hasn't been, we're waiting for the rules to identify if it'll be similar to the ones we had previously or it'll be different. So, you know, you might have alternatives where employees work unusual hours, further guidance is to come out on that as well. So employees on leave, say in month of February, volunteering during bushfires, remember we had all those kind of exemptions, not employed for all or part of February. So why February? Because that was maybe a person that was in March. You look at the month before and say what would have been their average hours. Obviously, if they weren't there in March, you'd look at May, because now we can look at that period and say what's their average hours. Would they have been on leave in May and not had the, you know, effectively the 20 hours because it was a bit unusual? So there will be an alternative test. They can also, the ATO will set alternative tests for turnover where there's no comparative period. We're just waiting on that. And also there'll be an alternative test where there's no business activity statement, you know, or it might be part of a GST group. Now, the rules may come out and say, well, look, substitute the dates, but that'll be similar to what we had previously, which probably will happen, but we'll have to wait for that. Yeah, may extend time to pay, which they have already, to 31 August, so that's great. But they may extend it even, you know, for the new rules. Because that's an extension they're giving. And how do you calculate the 20 hours weekly average? Well, they've given us some examples, but you know, I think we're waiting for the rules to get a bit more clarity on that. So let's see how we do with this slide. And we've got it all right on this one. So the summary. So the period now until 27 September, continue with your JobKeeper, no change. What has changed is add your new employees. So you have till the 31st of August to pay those employees, put the nominations in. Shouldn't be that many. There might have been some casuals that, you know, didn't comply with 1 March, but maybe they meet the criteria for the 12-month period at 1 June. So assess those. For the period 28th of September to 3rd of January, we need to reassess, see if you're eligible to get the JobKeeper for that period. So October, November, December, effectively those 3 months that you're getting it, you're reassessing. How you're reassessing, you're going back to your actual turnover, what's happened already. Very simple calculation, September quarter. Now, okay, if you're a monthly lodger, you just add them up, right? I don't think there's too much change there. So September quarter 2020, so July, August, September, compare that to July, August, September for the 2019 period. Have you had a decrease according to your relevant percentage, 15, 30 or 50? Yes, tick. Okay, tick, you're entitled to JobKeeper as you were under maybe the old rules, the JobKeeper 1, but the rate has reduced. So you're getting it $1,200 per fortnight for employees that work 20 hours or more, and $750 per fortnight who work less than 20 hours. I think that the change in rate was to acknowledge that, you know, sometimes people that were casuals that weren't getting probably weren't paid that much, 1,500 a fortnight. We're probably getting the same as part-timers that were working 1,500 a fortnight. Now remember these 1,200, if you're already paying your employees 1,500 or 2,000, you don't have to top them up anymore. You already topped them, right? You're already paying them. So as long as you pay them, but say you stood someone down, then you have to pay them 1,200. Now the question is, you know, say someone was employed before 1 March and they were stood down, they still stood down, or they may have stood down a bit later because Melbourne maybe stood them down in August or July. How are you going to get there? How are you going to get the average fortnight? How are you going to get the average to work out the 20? Well, what they're saying is you go back to February. So they were there 1 March, go back to February, look at that month before 1 March, because that would have been an indicator, so long as nothing unusual, that, you know, that would have been their normal working hours. So you look at the average, and is it 20 hours or more? Bang, 1,200 a fortnight, or was it less than 20 hours and 750? So you don't have to keep reassessing necessarily the hours. You just assess it once for that 3 months. So if you look at that 4th to January to March period, so again, 3 months, are you entitled to JobKeeper? You have to reassess. How you're reassessing, October, November, December. Look at that period, compare it to the last period. For a lot of businesses, it'll be straightforward. Now, if that doesn't work, there will be alternative tests. We're just waiting on those. So reduction in the rate. So here I'm saying that, again, same principle as before, but it's gone down to 1,000 now, and then 650. It's still assisting, but, you know, it is gone down. One thing to be aware of, if you're a business participant, you can still be entitled to the new rules as well. All works the same way. We're waiting on the rules, but effectively, they'll just get the, if they're working 20 hours or more, 1,000 and then 650, same thing. Now, the ATO brought this summary out, everything I've just said. So I think this is a good little, once you wrap your mind around it, it's a good little summary. So that is available on the ATO website, but it's here on the slide and you'll get a copy of the slides. This was the mini budget. You know, they just changed the version 2. I think don't forget, they extended that you can pull out your super, job seekers modified. Remember, you can claim assets if you have it. One thing to remember is the second half of the cash boost is still coming. So for those that say got 50 or 10 or something or 20, whatever you got in the first half up to June, you're going to get again in the second half of this year. And when are you going to get it? It'll just go through your BAS. So it'll just be automatic. So keep an eye out for it. Government-backed loans, if you need money. So if you need money to top up those new employees, the banks are giving opportunities that, you know, the JobKeeper goes back to the bank, so they lend you the money, which I think isn't a bad idea if you need that cash flow quickly. And I think it's a little bit quicker or easier to get those. Now, I haven't actually gone to get one myself, but I know that it's easier than getting the government-backed loan. It's quicker. So probably the best way is to go to questions, if I may, just so I'm covering off everything that everybody needs.
Thank you, Mariana. There has been quite a few questions, but we'll start with this one. I understand the deadline for monthly reporting of number of employees via STP and via business portal for July 2020 was on the 14th of August. Do you know the deadlines for August and September?
So are you talking about, and just to clarify, Patrick, if new employees are starting, you know, you have to pay them in the fortnight, but obviously your pays may not, the pay time may not correspond to the JobKeeper fortnight, but the ATO has said that, you know, that'll extend till the 31st of August. So this is for new employees. So nothing's changed for your old employees.
Which is the nomination forms need to be issued to identify new employees by COB today with payments by COB 31st of August. Can you please clarify?
Well, remember that the nomination forms don't get lodged. The nomination forms are for you to identify if your employees are eligible or not. So I would say, so long as you have it by the time you do the 31st of August, I don't think there'd be an issue there. But you need them beforehand because you need to know that they're not nominated someone else as their JobKeeper employer, because they can't double dip.
Okay. JobKeeper eligible business participant for sole trader when preparing the tax return. Does all JobKeeper income to be topped up to the ordinary sole trader income and taxed altogether?
So if you're asking me if the JobKeeper is assessable as part of, yes, it is. So you put it in your tax return if you're doing your tax return. That's what you're asking me, I hope. Mm-hmm.
Okay. What steps employees can do to check if existing employees are not employed somewhere else? We have a few stand downs that might have a part-time or full-time job somewhere else, but they have never asked them to confirm.
Well, if you've got your current employees, you would have sent them an employee nomination form, I would have thought. So effectively, you have to rely on that nomination form. So if you stood your employees down, but they're permanent in your role, or they're casuals, but you don't know they have it's specific in the form. It asks those questions. So that's why you need the nomination form. So the employee has given you the true and fair. Otherwise, how do you know? There's no way you know. So you need that nomination form. So you should have those already. And if it's new employees 1 July, you need to get those by the end of August.
Okay, next question. Is it assumed that a person who has joined our employment after 1st of July would automatically be eliminated for JobKeeper if in previous employment?
That's correct, yeah. I mean, they would have had to, from their previous employer, would have had to fill out that they had ceased employment. So they'd be no longer receiving JobKeeper under their old employer. But unfortunately, because they started with you after 1 July, they won't be eligible for JobKeeper. You won't be eligible for JobKeeper for them. Anything between 2nd of March or from prior to 1 July, yes, is a good.
If we have employees claiming through their casual job that they are full-time with us, that they are eligible to claim, can we force them to move to our company claiming JobKeeper for them?
Well, it's not about forcing them. I think it's more about the fact that they should be claiming through you. I mean, that's clear on the nomination form, is that, if they're casual employees elsewhere, it's the permanent employer is entitled to get JobKeeper, not where they casually work. And it's clearly on the nomination form. So they may have filled out the nomination form incorrectly. So it's not about forcing them. It's more about either the employee doesn't get or nominates not to be part of JobKeeper with you, but they can't nominate their other employer to get JobKeeper. They've just done it wrong.
What about casuals that started employment in January 2020 and have continued to work as casuals since then?
Yeah, so if you think they're casuals and it don't meet the criteria of permanent, part-timers or fixed, and I don't know what the definition of fixed is, I'd have to look that up, but I would say permanent, then they're not, and I guess it comes back to the contract, then I guess they're not casuals. If they're casuals, they fit square into that casuals, they don't meet the definition of long-term casuals. So remember, they would have had 12 months prior to 1 July or 12 months prior to 1 March. So they're not entitled. They may be working somewhere else, so they may be entitled under a different employer.
In the newspaper on slide 1, for monthly BAS reporters, is the test period September 20 quarter versus September 19 quarter, or September 20 month versus September 19th month?
Yeah, so yes, that's right. So it's quarter. So as far as we know that it's a quarter, so you just add up your monthly BASs. So you get July, August, September, add it up, and compare that to July, August, September, add that up. Easy way.
As charities get to exclude the government funding for the turnover test, can this be applied for the new actual turnover test?
Yeah, they haven't said that, they said they wouldn't change that. So charities can still exclude the government funding. But we're just waiting for the rules on that. So with charities, there's a few things like donations, for example, do we include or not, because they're not in a BAS. government funding is in a BAS, but you have the right to exclude. We don't think that's going to change. Donations, we haven't heard how that's going to be calculated. I assume they're just going to include the donations because it makes sense, but we'll have to wait and hear for that one.
Would you look at June, not May, due to the new date being 1st of July?
Well, I think it depends on where your employee started. Like, you know, to get the average hours, I suppose you're looking at. So if your employee, and this is only for the new rules for the way, so if you're looking at the August, September, up to 27th of September, you don't have to look at the average hours because we're not looking at the tiered effect. But if you're under the new rules, then I would imagine if you're under the new rules, in order to get the right average, you might have to look at when they'd actually started. So if you met the criteria, say for example, you're under JobKeeper 2.1 and your employees started before 1 March and you have some employees that started in between that period, so 1 July. To get their average 20 hours, and this is what we don't know yet because we haven't got the rules, it would make sense to look at if they'd started before 1 March, is to look at February, because that's going to give you a fair indication of what it looked like, whether it was 20 or less. Because if you're looking at your employees that were there at 1 March, you're looking at them in May, you may find that the average hours may have changed substantially because of the environment. So we're just waiting to see on that one.
If the Australian company has a turnover of less than 1 billion per annum and is owned by an overseas parent with a turnover of a higher than 1 billion Australian, can the Australian company still qualify for JobKeeper based on a 30% fall, or do you need to use the 50% threshold?
Yeah, under the old or new rules, so JobKeeper 1 and JobKeeper 2, the turnover test will still be based the same, and it looks at aggregated turnover. So it looks at aggregated means that anybody that controls you or owns you. So if you make the assumption that the overseas parent owns you, then you look at the overall turnover. So you look at the Australian and the parent, and you look at the turnover there. So if you're over 1 billion, the parent, you're definitely in the 50% threshold. I think the assumption is from the government is that the parent may be able to assist you, although I understand worldwide it's affected everyone.
Okay. We wouldn't know whether we are eligible for December 20 quota until 4th of January. Do we pay JobKeeper top-up for employees in advance in October, December 20, or wait until we are sure and back pay the top-up in January 21? And then there's a follow-up question. If we paid in advance, is it risky because we might turn out not to be eligible and cannot get the top-up payment back?
Okay, so maybe I think you've probably understood me incorrectly. So under the new rules, and just to clarify, is that so after 28th of September, you're looking at October, November, December, right? To get the JobKeeper payment for that period, you go back and test. So you test from July, August, September. So you're testing July, August, September in mid-October. And then if you meet the test, you're effectively going to get JobKeeper for October, November, December, which is what you're saying here. So you're not paying your employees in advance. You'll have time to test and you'll know that you're in the JobKeeper or not. Now, when you're looking at January, February, March, again, you're testing the December period. So you're testing in arrears effectively. You're not, so I don't think I think you may have understood it incorrectly. Just have a look at the periods again that I've got on the email and the infograph, and it will give me a buzz.
How do we consider staff who are on maternity leave?
Well, I think it's the same rules. Eligible employees, are they being paid government maternity leave? If they're not being paid maternity leave, like in the sense they're unpaid maternity leave, then they're still employees. So they still would be entitled to JobKeeper. And as I mentioned before, is that I think the 20 hours is the question. And we're just waiting on the rules because obviously they'd be less than 20 hours because they're not even working. Or an employee might be stood down and still stood down. But that's why I'm saying that you need to go back to 1 March if they were employed before 1 March and look at the month before, because that's going to give you a real indicator of what their average hours would have been. So they could still be stood down by the time we're in the second JobKeeper. And when do you to work out the 20 hours? And it's the same with the maternity leave. So you're still looking at the time when they were employed. So if someone's on maternity leave and they were employed 1 March, I'd still look at to get the 20 hours to work out what tier you're in, whether you're in 1200 or 750 in that October, November, December period. Then I would look at the February period. Now, if that person was employed with you from 2nd of March to 1 July, and they go on maternity leave after that, then I would go to the May period and look at what your average hours were then.
Next question, if you are a monthly lodger, do you need to meet the downturn for each of those months? So July, August, September, or just the sum of the quarter?
No, just the sum of the quarter.
Okay.
So it's just comparing the sum of the quarter, not each one. Previously they had the June quarter and September quarter, but they took that out. So it's just standalone September quarter and standalone December quarter. You don't have to meet September and December to get the other second, the JobKeeper in January to March.
Are employees who start after 1st of July 2020 eligible for the initiatives that kick off in September?
Simply no. So I think what the rules will say, and waiting for the rules, but I think what they've done is they've extended it to people that have started up to 1 July. So that means that, they'll take everyone up to 1 July, but if you started after that, you won't get the new incentives. Or even you can't be entitled to it in August, up to August, September. So either way, the answer will probably be no. And I say probably because I'm waiting for the rules, but it's pretty indicative that it's 1 July. Like it was 1 March.
For the JobKeeper 2.1, can new employees be added onto this scheme for those who were hired before the end of June?
Yes, you can. Yes, for the JobKeeper 2.1. So just forget about JobKeeper 2.1 because I call JobKeeper 2.1 28th of September, so as not to confuse it. But if you have new employees, just think of it this way, from 2nd of March to 1 July, then yes, you can add them to your current JobKeeper. If you're getting JobKeeper, you can add them. Now, that will continue after that. So when you retest, if you meet the turnover test in that September period, then they'll likely be eligible to continue on to get the JobKeeper for the new period, October, November, December. But you have to meet the first test first, which is your turnover.
Employees employed in August 2020, will they be qualified for JobKeeper in October, December and January, March period?
No. So same reason as before. So they've got to start at 1 July at this stage. Things can change, but at the moment they haven't announced anything along those lines. It's just anyone from 1 July.
We have an employee that also has their own business. They are employed full-time and they are eligible for JobKeeper through their employer, but they are claiming through their business. What rights does the company have to ask that they participate in JobKeeper through their primary employer?
Well, if you have a look at the nomination forms for employee nominations and business participant nominations, it specifically says in there that if you are in the participant employee nomination form, it says there if you have a permanent employer, you're not entitled to the business participation. So it has to be given by the permanent employer. So long as, even if the permanent employer doesn't meet the turnover test, then they probably can't even get JobKeeper. It's quite interesting, right? But if your permanent employer does meet JobKeeper, then the permanent employer has a right to claim JobKeeper. Although, if the employee nominates otherwise, that they don't want to participate, then the one in all in doesn't fall onto you as the employer, it falls on the employee. I just think they're doing it wrong. They just shouldn't be doing it that way.
Is there a rule regarding the 20 hours for business participant?
Yes, It does. It works the same way. So if you started your business, say because if you're already on the business participation from 1 March, this probably wouldn't be applicable for business participants under the current JobKeeper. So if you looked at it, if you started your own business before 1 July or 1 July and before, not after that date, but 1 July and before, you look at the 20-hour test and it looks at the average 20 hours. So again, you've got to look at May and say, what is your 20 hours of work that you're employed in the business, that you're doing work in the business? How? I don't know. I guess you can do timesheets, and you're going to know, I guess. You can really dig into it a bit more and find out. But look at the average 20 hours. So if it's 20 hours or more, then you'd be getting, under the new rules, you could probably even go into the current JobKeeper, but you'd have to meet the turnover test first. And that's the question, whether you would meet it. But effectively, I think under the new rules, you can get it as well. And that would apply for you'd have to check the turnover test for that September quarter, and then you can start getting it for the October, November, December. And then you have to test again if you want to get it for January, March.
In this situation, they have seasonal employees who work only several weeks during the financial year. Do they come back they do come back every year, and can they be qualified as eligible casual employees?
I'd go to the Fair Work Act for that one. I think I've given you the link, but I'm not sure they would be, because I think it's long-term casuals. And seasonal workers may work only several weeks, as you indicated. I don't know if there's a pattern there, that they come back every year, the same people, but I would say it's a one I can't answer straight away.
We have the forms signed before the stand down, but they might find jobs somewhere else after. Are we obligated to confirm again?
Interesting. Yeah, I'm not sure about that. That's a good question, Frank. Because at the moment, I think the reporting is going to stay the same. So I'm just not sure that whether under the new rules, you have to nominate again. That hasn't been made clear yet. So I'll have to confirm that. So thanks for your question, but I'll come back to you.
I have an employee who work more than 20 hours time, but at the same time, my employee is also sole director of his own firm with a PAYG. Is he qualified for JobKeeper in my firm, though he has his own company with wages?
Interesting. I wonder how he does both. But I guess it's basically the one that gives the permanent, where he's a permanent employee. So is he a permanent employee in both? Then he can select. It's not about him being a business participant, because he wouldn't get that. It'd be, because it sounds like he's got his own firm with PAYG withholding. It's likely he'll nominate under his own organisation, under PAYG. But yeah, because it sort of works that he's permanent on both. That's a tricky one, but I don't think it'd be erroneous if he chose it under his own business. It's different to the other example we had, because in that one, he was only a business participant, being a director. I wasn't getting a salary, but he was employed full-time somewhere else. That's different.
So to confirm, Mariana, new permanent employees joined after the 1st of July can be included in our existing JobKeeper claim. We just need to include them in our ATO submission and STP code.
No, I didn't say that at all. No, see, I love that our people take it the wrong way. But this is good. No, so not after 1 July, before 1 July. You start paying after 1 July, but they've got to be new permanent employees have joined pre-1 July or 1 July and before. So 2nd of March to 1 July. They can be included in the existing JobKeeper, not after 1 July. And then if they are before or 1 July and before, then you have to, yes, make the usual employee nomination, make the top up by 31 August, etc., and do your STP coding. I'm not sure where you get 28th of July, but nothing's changed in the current JobKeeper. So paying monthly to eligible employees after the declaration. Oh, okay. Any changes after 28th of July interim of payment time? Are you talking 31 August? I'm not really clear of that question. Sorry, if you're paying monthly, that's fine. I know that it's not in the JobKeeper fortnight, but the ATO accept that as long as you're paying the monthly amount.
A full-time employee going on maternity leave in August entitled to JobKeeper until September and onwards?
Yeah, so they're full-time employees going into maternity leave. Again, is a government paid maternity leave? Probably not. If it's just the employer paid maternity leave, pays them a couple of weeks and then doesn't pay them any salary in August, they should still be entitled to JobKeeper currently until September. After that, after the 27th of September, after the 27th of September, they need to retest first if the employer is within the JobKeeper rules. If the employee is within the JobKeeper rules, I'm not 100% sure if you have to nominate all your employees again. I don't think so, though. I think what you have to do is you have to just assess about the 20 hours or more. And that's why I'm talking about, say, for example, you've got someone who's on maternity leave in August, and you're in the JobKeeper from the 28th of September to 31 December. When you're looking at it, what I think is happening is you're assessing at that point in time you're in. So your turnover's greater than dropped by 30% or more, 50% or more, or 15% or more, depending which category you fit in. Then I don't think you have to do nomination forms again. I think what you have to do is check whether the employee has worked the 20 hours. So for this particular full-time employee, you've got to say, when did they start? If they started that 1 March, before 1 March, then you would check the February period and say, did they work 20 hours more or less in that period? If they work 20 hours or more, then you pay them $1,200 under the new rules from the 28th of September, right? If they work less than 20 hours, then you pay them $750. Now, say that the person that's gone on maternity leave in August started after 1 March. So then you would do your testing time for the 20 hours, average 20 hours is May. So it all comes back down to, I think under the new rules, so you've got the new 3 months, October, November, December, that quarter, and then you test for that, and then you test for January, March. The question is, do you have to do nomination forms? I don't think so. I think what you're going to have to do, and I could be wrong there, is I know about the nomination forms. I think you've already nominated them. Nothing's really changed. And employees need to notify you if anything has changed, is to work out the average hours. So is it 20 hours or more? And when do you actually calculate that average hour? Well, it just depends on when you started. So it'd be either February or it'd be May when you're testing for the 20 hours. It'd be unfair if, say, you tested it all in May, because something would have changed with COVID, so it may give you the wrong result. But the rules will confirm that. I mean, I've read it, currently where it's sitting is that you're testing when you started. So if you started pre-1 March, you're testing in February.
If we are not eligible for JobKeeper 1, but in July 2020, our turnover fell more than 15% by compared to July 2019, is this the correct assessment?
Yeah, you can still be eligible for JobKeeper 2. Yeah, definitely. You just have to assess, really. That's all it comes down to. So you're looking at your turnover, and then you would have to nominate your employees because you wouldn't have had nominated them in the past. So you can still be in it. I just wonder, could you be in it? Would you be in it? I guess July, August, September, you've gone downhill in 2020 versus when you tested back in March, April. Now, remember that if you feel that your turnover has dropped in July or June, you can still get into JobKeeper 1 as well. So, you know, you can effectively, you can be in JobKeeper 1 now if you think your turnover is already dropped. So you can test every month. So remember the period was March, April, the initial period, because you didn't start getting paid until the first week of May. So you could still test, and you could use projected test in the version 1. So that still applies. Yeah, thanks for coming along and giving an hour of your time. And if you've got any questions, just reach out. That's what we're here for. So anytime.